Good morning, everybody. Seems like we have maybe quite a few people still filtering in through the lobby, so we'll give it just a minute before we'll get started on this month's roundtable. Somehow build a crosswalk. Just some light housekeeping. If you want to put yourself on mute, but if you have questions or want to add some commentary, feel free to come off of mute. The Q&A should be open, and there's also the chat option. Looks like we're slowing down, so we'll go ahead and get started. Welcome to this month's Revenue Cycle Roundtable, and thank you for your flexibility. Today, we're going to be doing Foundations of Grant Management with Forvis Mazars Katie Hill. She's their Senior Manager of Consulting at Forvis Mazars, and we're excited to have her. So with that, Katie, I will pass it on over to you.
Yes, hello. Good morning, everyone. We have exciting stuff to talk about today. Grants management is one of my favorite topics. So I'm excited to be sharing some information with you all today. So I am going to share my screen and start the slideshow. So can I get a thumbs up if y'all can see my screen?
Good to go, Katie.
All right, thank you. All right, so today we're going to talk about the foundations of grant management, building the framework for effective stewardship. As Stephanie said, my name is Katie Hill. I'm a senior manager at Forvis Mazars. Spent about the last 10 years working in community health centers and then transitioning to a consulting role with Forvis Mazars. So that's my information. I will send the slides to Stephanie after the call, so you will get access to these slides. So our agenda today, I want to talk about some updates to Uniform Grants guidance that happened in October of 2024 and also some updates from October of 2025. We're going to talk about some pre-award considerations. We're going to talk about foundations of grants management, and we're going to talk about some post-award considerations. So updates to the Uniform Grants Guidance. There are some updates that occurred in October of 2024 and October of 2025. So these updates are effective for all new HHS awards as of October 1st, 2024. So the 45 CFR 75, that sunset, so it's not in use anymore. So you should update your policies to remove, if there are any references to that, you should update that and you should replace it with the 2 CFR 200. And then health centers should also add references to 2 CFR 300. And I have a link there for you. The modified total direct costs, they went from 25,000 to 50,000. The equipment threshold increased from 5,000 to 10,000. So there are some purchasing and disposal considerations to think about. And then also you need to think about at your health center, do you want to adopt the increased amount of 10,000, or do you want to keep yours at 5,000, or maybe you have a different amount? It really depends on the health center, and you should assess any cost report implications before implementing that change. Generally speaking, when I worked at my health center, I always liked to mirror my policies to what the federal government was using. I found it easier to manage one policy instead of, managing, multiple policies, one just for federal and maybe one for other. So I liked to keep them all one policy and mirror what the federal government was using. The micro purchase threshold went from 10,000 to 15,000, and it can even be 50,000 if requested and approved by the granting agency, but you would have to request that to get that amount. And closeout, the time period to submit closeout reports, that increased from 90 days to 120 days. And the de minimis indirect rate went from 10% to 15%. So those are kind of a summary of the main changes that you should be aware of. And I also put a link to the current grants policy statement so that you can read through that. It kind of summarizes all of those. Um, and other updates. So they updated procurement thresholds. The simplified acquisition threshold is 350,000. The micro purchase is 15,000, like we just talked about. And then also making sure that you've signed Form 690, which is just a civil rights assurance form. Okay, now we're going to move into some pre-award considerations. So we want to talk about some policy considerations. So the Department of Financial Integrity, financial management requirements. So review criteria can be used as a guide to ensure existing financial policies and procedures include the necessary controls that conform to prescribed standards in the Uniform Grants Guidance. So, what does that mean? Well, you want to make sure that you have policies and procedures at your organization. And some of the biggest problems that we see is that the policy isn't compliant with the applicable regulations. Sometimes the health center is not following the policy that they have. So sometimes we can, create a policy, and we've probably all been there. We create a policy and we kind of move it to the side, and maybe it, is collecting dust, and we actually aren't following that policy. So we just want to make sure that whatever policy we're creating, or if we need to update our policy, if we did make changes, we want to make sure that we are changing and updating our policies on a regular basis. And sometimes we see the health center is using maybe a generic policy that it didn't tailor to what it's actually doing. So it's important that you have those policies and procedures in place, not only for grants management, but just to run, the financial operations. And also, in terms of if you have, when you have HRSA come on site for visits, they will often ask for specific policies, and they are looking to make sure that you are following those and to make sure that they have all of the wording that is required to be in those. Okay, so HRSA feedback from technical assistant site visits. So acknowledgement of federal funds. The Stevens Amendment language must be used when issuing statements, press releases, requests for proposals, bid solicitations, and other HRSA-supported publications and forums describing projects or programs funded in whole or in part with HRSA funding. The next one is the surveillance equipment. Basically, what this says is that you can't use Chinese telecommunication. So they want that to be in there. And your chart of accounts. Federal grants should be clearly identified in your chart of accounts by assistance listing title and number, federal program, federal award identification number and year, and name of HHS awarding agency. So it's important to have those. Also, cash management drawdowns, making sure that you have a policy around that. Very important. The OIG, the Office of Inspector General, maintains a hotline for receiving information concerning fraud, waste, or abuse. Information must be posted in plain sight of staff and the public. So that's another thing. Fringe benefits. So federal funds appropriated to HRSA and awarded recipients may not be expended for abortion services. Employee health benefit coverage that includes, or employee health benefit coverage that includes abortion services. An exception applies to the restriction on abortion services in certain cases. So that is also something that needs to be considered when we talk about fringe benefits. Okay, and so now we're going to move on to the foundations of grants management. So what are some foundations of grants management and principles that you need to follow when making draws specifically? So we're talking about drawdowns. So you need to think about your accounting period. You need to think about your period of performance. And what I mean by that is, let's say that I have So let's say that my 330 grant award begins May 1st and ends April 30th. I can't, and so let's say it started May of 2025 and ends April of 2026. I can't draw down for maybe expenses that I had in May of 2026 because that's outside of the period of performance. And so that's kind of what that means. So you want to stay within that budget period. Um, Budget flexibility guidelines, time and effort, system of control for allocating your wage and expense. Um, this is really important. I talk about time and effort a lot, and I help a lot of health centers coming up with ways to ensure that they are recording time and effort the way that they need to be. I like to implement it directly into my payroll software so that I don't have to keep paper time and effort reports outside of my payroll system. So I've just found that that is a really good way to streamline that process. There is an education process to that. It's important that employees know how they're funded and know what time and effort is and their responsibility for that. Um, so procurement, expense allowability, what's permissible, and not reimbursed elsewhere. Property considerations, cash management, and then other considerations, mandatory reporting, indirect cost rate considerations, program income, other lines of business, those things you need to take into consideration when we talk about making draws. Okay. So your policy and procedure must include a detailed description of the accounting system, including the ability to report revenue and expenditures separately by federal program, the identification in its chart of accounts of all federal awards received and expended and under which federal program, and the process of maintaining records pertaining to the source and application of receipts and disbursements, federal awards, authorizations, obligations, unobligated balances, assets, expenditures, income, and interest, which must be supported by source documentation. And I am actually going to show you a sample chart of accounts. Because I have seen, some challenges at health centers in terms of how they set up their chart of accounts. And sometimes we make things harder on ourselves, not intentionally, but sometimes, we just make things more challenging than they need to be. And I feel like that really starts really at your chart of accounts. And so this starts with having a segment for location, because we want to be able to look at financials by location to know how our sites are doing. Then you have your account number, right? Your general ledger account numbers. And what I will say about the general ledger account numbers is that what I see sometimes is that we are creating general ledger account numbers based on funding source. So for example, I'll see, 330 revenue as a GL code, and then I'll see COVID revenue as a GL code, and then I'll see, Ryan White as a revenue code. And really, that kind of defeats the purpose of a fund accounting software, because that's why we have the grant code segment, so that we can identify which grant that revenue goes to. So if we go down here to our revenue codes, if you see here, you can see this, let me make it bigger. So if you see here, we have one GL code for grant revenue on a federal level, another GL code for grant revenue on the state level, and another grant revenue as other, and then we have contribution revenue. So, we're not creating a separate revenue code for each funding source, because we identify the funding source via our grant code, or maybe it's called project ID. Sometimes it's called different things in different systems. But otherwise, if you create, GL codes based on your grants, you end up with a really huge chart of accounts, and it becomes a little challenging to manage and to maintain. So I wanted to mention that. And then we have department. So you have your various departments. And a lot of times I will see clients set up their accounting software to accommodate either the UDS report or the cost report. And I wouldn't say that that's wrong. I would just say that you want to think about that. And generally speaking, you wouldn't set up your accounting software specifically for a report that you do once a year. So I would just, be mindful about how you're creating your chart of accounts. And I would not create it to accommodate a report that you do once a year. And then we have funding source. So funding source synonymous with grant code. And then we just have different, different grant codes here that you would create. So I wanted to share sort of an example chart of accounts that we use. So we will go back. Okay. All right. And then what is HRSA's expectation regarding the tracking of revenue and expenses by federal program? And should the chart of accounts include a funding source segment? So yes, it should, like we just talked about. And we also want budget to actual review by funding opportunity. We need to be able to see where we're at related to our grant budget. Most accounting softwares have the ability to put different versions of budgets into the system. So you could potentially, put your grant budgets in the system and create, actual to budget to actual reports within your accounting software. And in fact, that's what I would recommend doing. Should it be done in Excel or the general ledger or both? That's really a question. It should be done in your general ledger, right? Our accounting software is our system of record. And so we want to make sure that we are getting everything into our accounting software, coding expenses appropriately, coding revenue appropriately. From my perspective, the ultimate goal in ensuring that we are coding things in the general ledger is that I should be able to run an income statement by grant code, for a certain time period and see what is my revenue and what are my expenses, right? And if I'm noticing that my revenue is exceeding my expenses, that's a red flag because you don't want your revenue exceeding your expenses. It is completely fine for your expenses to exceed your revenue. It just means that you had more expense and probably didn't draw down for the entirety of the expense for one reason or another. Maybe you decided it wasn't allowable or you didn't have, money left in the budget. So it's okay to have more expenses than revenue. It's sort of a red flag, something that should be researched if you are coming up with more revenue than expense. It means you could be missing coding on your expenses to particular grants. What support should be prepared and approved to substantiate grant draws? So for payroll, a lot of times what I prefer to do is I make sure that my payroll software is creating an import or some kind of general ledger interface so that I'm pulling payroll directly out of my payroll system and then putting that payroll into my accounting software. And ideally, your your payroll software is set up in a similar way to your accounting software. What I mean by that is that the departments you have in your accounting software mirror the departments you have in your payroll. The grant codes that you have in your accounting software, you also have those in your timekeeping system so that you have this seamless transition between systems so that you can properly get expenses in. If that is not realistic for you, or if that is not something that you currently have, you just want to make sure that you're using, payroll reports. So I always pull reports directly out of payroll, and I use that as the backup for my draw. Procurement transactions, there's a lot of documentation when you use federal funds to procure equipment or large purchases. So you just want to make sure that you, again, are following your procurement policy and that you have all of that documentation. If you were required to get bids, you will be required to show that you got bids and how you came up with the decision. So you want to make sure that you maintain all of that documentation because you'll need it. Do you need support if expenses are more than draw? And so remember what I just said, it's okay for you to have more expenses than what the draw is, but you don't want to draw more than the expense that you have. Okay, period of availability of funds. So only allowable costs during the period of performance may be charged to the grant unless specifically authorized by HHS. Approval needed in writing for expenses outside of the period of performance grant year. Before with there being an exception for certain closeout expenses, which isn't common with the 330 grant. Entity must liquidate all accrued obligations incurred under the award no later than 120 days after the end of the final grant period. And that also coincides with your FFR submission, your federal financial report submission. So budget flexibility and expenditure analysis. So health centers are required to compare expenditures with budget amounts for each award. You do that to ensure the total costs don't exceed the amounts budgeted for the grant period. You want to identify when you have significant variances between actual and budget. Minor budget changes. So within a budget period, you can adjust your budget without prior approval if the change is within or between approved direct cost categories. Your award's federal share is below the simplified acquisition threshold, and your notice of award doesn't include a prior approval needed. And you'll want to check the current threshold in the federal acquisition regulation for those definitions. Significant budget changes. Significant budget changes in line with 2 CFR 200.308 require prior approval. Budget changes are considered significant when your award exceeds the simplified acquisition threshold and the cumulative amount you want to transfer between cost categories is expected to be more than 10% of the total budget. So other considerations, how should budget deviations in the federal column be analyzed? Review federal and total budget for the 10% deviation and reach out to your project officer if there's a significant deviation. If zero was originally budgeted in that federal column, reach out to HRSA and seek guidance. Generally speaking, if you've budgeted zero in that category, it's usually going to require a prior approval or at least, approval from your project officer to move money into that category. Considerations for property and equipment, rebudget likely necessary if there is a change to capital project or equipment request. And then is rebudgeting required if changing employees allocated to grants? So that is the question. We get that question a lot. So we're going to talk a little bit about that. So the answer is it depends. So for HRSA and most federal grants, changing which employee is charged to a grant is usually treated as an internal budget management decision and doesn't require prior approval if the work remains within the approved scope of project, the overall budget categories are not materially changed, the grant's objectives and performance are unaffected, and the employee being added has duties consistent with the award. However, rebudgeting or prior approval may be required if the personnel change results in a significant shift of funds between categories, a change in the approved scope of work, or the replacement of a key person identified in the award application or the NOA, a change that exceeds a rebudgeting threshold established in the notice of award, a reduction of effort by a project director or other key personnel beyond the allowable limits.
Hey, Katie, real quick, we got a
Yes.
question in the chat from
Mhm.
Brian. He said, we have recently been advised that the 10% rebudget threshold had been moved back to the prior 25% threshold. Can you confirm the 10% number? They are under expanded authority if that makes a difference.
Okay. I will look that up and get that answer to you. Okay. Okay, so and then just wanted to kind of walk through an example. So if we originally budgeted for a medical director salary of 75,000, the actual staffing, we're actually drawing down maybe for a nurse practitioner who has a salary of 75,000 instead. And service and grant objectives remain the same. So in that case, you likely would not need, you would not need to go through the prior approval process. A scenario that might require approval would be if your project director leaves and is replaced, or if personnel changes alter the approved scope or the service delivery model, then that would change. For the 330 grants, HRSA is really concerned with whether the approved scope of project is maintained, whether key personnel changes are reported when required, and whether expenditures remain allowable, allocable, and reasonable. So that's really what they're focused on in terms of 330 grants. Okay, timekeeping and uniform grants guidance. So this is my favorite subject. So charges to federal awards for salaries and wages must be supported by a system of internal control which provides reasonable assurance that the charges are accurate, allowable, and properly allocated. You have to make sure that it reasonably reflects your total activity for which the employee is compensated by the non-federal entity, not to exceed 100% of compensated activities. And it's got to comply with established organization policies and procedures. So time refers to, the amount of hours I work in a day, right? So if I work 8 hours, and effort refers to what I spent those 8 hours doing. So that's why it's called time and effort. And they need, we have to be reporting both. So for timekeeping, you must have something that supports the distribution of the employee's salary or wages among specific activities or cost objectives if the employee works on more than one federal award. I can't stress this enough, and I feel like this is often something that people get confused about, but budget estimates alone do not qualify as support for charges to federal awards, but may be used for interim accounting purposes. And so what that means is that, when we submit applications for grants, we have to submit a budget. And in that budget, we are estimating the amount of time that employees will work on the activities of that grant. Maybe somebody is on that grant at 100%, maybe they're on at 50%, but simply allocating their time to that grant based on that budget alone doesn't satisfy the time and effort requirement. If you are going to do that, you have to at some point reconcile. If you are doing allocations based on budgets, you have to bring that to actual at some point, whether that's monthly. I would probably suggest doing it monthly if that is the way that you are doing it. But you have to true it up to the actual time and effort spent. For example, if you are allocating 50% of an employee's time because that's how they were budgeted, and then you learn they were actually spending 60% of their time, you need a time and activity record that reflects the 60%, and then that also must be reflected in your general ledger, in your accounting system. And for me, that seems like a lot of extra work. And so that's why I like employees to just record their time and effort because they know what they're working on. I don't always know what they're working on. Supervisors, they know-ish what they're working on. So I always have, the employees report their time and effort, and then it just comes over. So I'm reporting actual time and effort worked, so I don't have to go back and true that up. This is an example of a time and effort report. For me, this makes my brain hurt. Number one, because I don't like paper, and this just seems like a lot of extra work to me. But this is what, if you were using paper time and activity records, this is an example of what that might look like. And there's a certification statement. The other thing that I wanted to mention when we talk about time and effort, if you are getting these time and effort activity reports on paper, or if you're having people submit it through payroll, the important thing to remember is that it must be signed by the employee and the supervisor. I had a client who was keeping paper paper time and activity reports. They just kept them in Excel and they put the person's name at the top and the person, said what they worked on for that time period. But because they were not signed by the employee and the supervisor, it was a finding on an audit and it was reported to HRSA. Um, so I just want you to know to make sure that you're getting the employee and the supervisor signature signing off on those time and activity reports. Okay, so procurement policies and procedures. So develop a procurement policy modeled after federal standards that can be followed when using federal and non-federal funds. So we always think that that's best practice, right? I have seen people say, oh, well, I'm not using federal funds, so I don't have to follow their policies. And I mean, technically that's accurate, but it becomes difficult to manage that in your organization, and especially if you're a growing organization, to say, oh, well, it applies to this, but not this. And so it's really best practice to just standardize it across the board. So then that you always have the backup, you're always following that same policy and you're not having to figure out which one am I following. Put processes in place to facilitate documentation. We see this a lot where they're like, yes, we did get bids, we did do this, but we didn't document it. We didn't document how we made the decision. And so, it's that old saying, if it's not documented, it didn't happen. So you just want to make sure that you have the process in place so that you maintain that documentation in case you do get audited. Establishing who is responsible for what. And again, documentation is really key. Policies and procedures must require documentation must be made to support all disbursements and describe how. Disbursements must be pre-approved and indicate by whom for both small and large dollar purchases. Expenditures be reasonable and explain how this should be accomplished. Bids, quotes, and ensure all vendors are checked against the excluded parties list. That is something that I also see people forget to do sometimes. So you have to make sure that the vendors that you are using are not on that excluded list. And you have to have documentation of that you checked to see that. Okay. So we have a chart and methods of procurement. Like we discussed, the micro purchase and simplified acquisition thresholds, those were updated October 1st, 2025. And again, make sure you update your policies if you're choosing to use those higher thresholds. And something else I wanted to mention is sometimes I see health centers make their policies more restrictive than they need to be, and it sort of can become administratively challenging to have that policy. And so an example here is that it says quotes from an adequate number of sources, 2 or more. So sometimes I will see, and that's the requirement, I believe, is that it's got to be 2 or more. And so, but I'll see some people who put policies in that they get 3 or more. So you're making it, you're making yourself get another quote when it's not required. And so you might want to consider, just putting that the requirement is 2 or more. Otherwise, you have to follow what your policy says, even though that's not what the federal government says. So that's just something to keep in mind. And in terms of property control, your policies and procedures must require property records must be maintained that include a description, the cost, the purchase date, source of funding, location, and condition of each property item. Periodic physical inventories should be taken and reconciled to the property records no less frequently than every other year. Property purchased with government funds must be tagged. Property be safeguarded to prevent loss or theft and describe how. And disposition requirements for property obtained with federal funds. So These are the things that you would want in your policy and procedure. And I'll say one thing about tagging things with government funds, tagging something as purchased by government funds. When I was at a health center that I worked at, we had auditors come in for one of our grants, and they came in and they actually checked that. So we had made some purchases with some grant funds, and one of the things that they checked during their audit was to ensure that it was tagged so that it indicated that it was property of the federal government instead of property of the health center. So I have seen that. I have seen that be audited. So you just want to make sure that you are following that. And then when we talk about disposals, you need to have information on that. And generally speaking, if you are disposing of something that was purchased with federal funds, you have to get approval from the funder to dispose of that. So the current fair market value is greater than 5,000 or 10,000 after 10/124. So you want to make sure that you're going through the necessary steps if you are going to dispose of property or equipment that was purchased with federal funds. Property management standards for equipment include all of the following. So you want to make sure that all of these are there. The description, the serial number or identification number, source including award number, whether the title vests in recipient or feds, the acquisition date, the federal share percentage, physical location and condition and date of update, the acquisition cost, and ultimate disposition data, including date of disposal, sale price, or method used to determine current fair market value. Now, when you are purchasing equipment and capitalizing it, I know there are a lot of accounting systems that accommodate a lot of these fields. So if you do have one of those accounting softwares, you want to make sure that you're utilizing that. Because it would be better to have it, in your accounting software if you have enough fields, and a lot of accounting softwares do now, to be able to accommodate this information so that you have it all in your accounting software. So federal interest is tied to fair market value. Fair market value should be analyzed prior to construction or renovation project. Fair market value assessment should be performed after the project. And then there's different examples there. Equipment, it depreciates. HRSA will work with grantees to recognize the changing market value of improvements and other activities made by the grantee or property owner of the facility. And you usually have to fill out these forms, federal forms, 428 and 429, if you have purchased property with federal funds. Okay, a notice of federal interest. It's just a lien against your federally funded property. It protects the financial and public interest in the real property that's being supported by the federal government. So some of you may have seen those. Prior approval standards require advanced federal permission for capital items. Purchase of capital assets, kind of like we've already talked, or change in use or purpose. So maybe you've purchased something with federal funds, but you're no longer going to be using it to provide healthcare services, or you're no longer going to be using it to provide services that are within scope of the grant. So those typically require advanced federal permission for that. Prior approval must come in the form of a written request from the grantee to HRSA, either by letter or by email. And then we've included the information that needs to be included. And I don't know if any of you have gone through the prior approval process, maybe not related to federal interest or property, but I know I had to do a prior approval request. We had some capital projects, and we were significantly changing one of the projects. And so we had to go through the full prior approval process with HRSA. My experience, it was a quite tedious process and very very detailed, had to provide a lot of documents, redline things, and there was a lot of back and forth. So I guess what I'm telling you is be prepared if you have to go through the prior approval process, or maybe the process has changed. I don't know, but it can be sort of a long process. Um, so payment related to cash management. You want to maintain written policies and procedures that outline minimizing the time elapsing between the transfer of funds from the payment management system and the disbursement of those funds by the recipient. So when does you want to consider when does a health center have federal funds in its bank account? How many bank accounts do you need? So I also see this often. Some health centers will have a bank account that is only for maybe their HRSA 330 grant. You can do that. There's nothing wrong with doing that, but you are not required to keep those funds in a separate bank account. As long as you are accounting for them properly in your accounting software, you don't need to have a separate bank account just for your HRSA 330 funds. Again, if that's something that you want and maybe works for you, it's okay, but it's not required. And something about interest and what does administratively feasible mean? So we're going to kind of talk through some of those. And I think we were all in the change of this administration. I think there was a lot of fear that came with that, right? I know I had a lot of health centers who were drawing down funds because we thought that those funds were going to get paused or that we weren't going to be able to draw them down. And a lot of us rely on those funds to support our payroll expenses. And I know that that was a very uneasy and uncertain time. And so we had a lot of questions about how much can I draw? I mean, can I draw all of my grant award today? And then, put it in deferred and then move it to revenue as I expend it. Can I do all of my remaining grant funds as one draw, multiple draws? How far in advance of expenditure and cash disbursement can I draw? So, and what does administratively feasible mean? So I would say that you want to draw down within a small period of time from when you're actually going to spend the funds. And I take a conservative approach to that. Other people are willing to be more risky, and I would say that you need to have a policy related to cash management and just ensure that you're following that policy. Because there's also interest, right? So if you take a draw, but you don't use it for a long time, then they want you to be calculating interest. So that's something that you also need to consider. So the 3-day rule to spend funds. So in accordance with the Department of Treasury regulations, federal cash must be drawn solely to accommodate your immediate needs on an as-needed basis only and must not be held in excess of 3 working days. So this is what it says in PMS for payment requests. And when you certify, when you make drawdowns in PMS, you have to check box the certification. And I don't know if you've ever read the fine print there, but it outlines that same information. And also new with the new administration is you're also certifying that costs don't violate executive orders ending radical and wasteful government DEI programs and preferencing and defending women from gender ideology extremism and restoring biological truth to the federal government. So they have also added that into your certifications in PMS. So your cash management policy. So we have some suggested language. You want to say that it's the intention to minimize the time elapsing between the transfer of funds from payment management to the disbursement of those funds at the community health center. So, for example, when I would do drawdowns, we would get paid on Fridays, and I would initiate the drawdown on Wednesday because then the money was likely in my account on the same day that payroll hit. And so that's kind of how I liked to time my drawdowns. And that was because I had only had payroll on my budget. And so that's how I timed my drawdowns. Um, there's also, some information while cash advances are permitted, federal regulations still require that timing and amount of cash advances shall be as close as administratively feasible to the actual disbursements by the recipient organization. Um, and then reimbursement requests, there's some language in there that you should have related to that also in terms of the cash management policy. Related to advance payments, I would also have some language in your policy about that. And again, just a reminder that whatever you make your policy, you want to make sure that you're following, because that's what auditors are going to look at. So there's just some language here about that. Reimbursement requests. The draws will not generally be made to cover future expenditures, with the exception of situations discussed above, and draws will not be made to alleviate cash flow problems within the organization. When feasible, the organization will request advance payment for costs already incurred and will disperse advance funds as soon as administratively feasible. The amount drawn down will be limited to the minimum amount needed to cover the allowable project costs. The draws will be timed in accordance with actual immediate cash requirements of carrying out the approved project, the scope of project. And the draw is not completed any earlier than necessary to actually make the payment. And it's expected that it will be within three business days. So again, just more language for your cash management policy. The policy and procedure on the limitation on use of HRSA funds. So you want to incorporate legislative mandates that limit the use of funds on HRSA grants and cooperative agreements. And HRSA's policy bulletin provides the provisions that must be incorporated. So I have a link to that there. Some of the information includes salary cap, language regarding advocacy and promotion of gun control legislation, sterile needs, abortion, and pornography, etc. And it requires an annual review of HRSA's legislative mandates to incorporate any mandates in your policy. So you want to make sure that you're reviewing that on an annual basis. So for mandatory disclosures, your policy and procedure must include a process to disclose in a timely manner in writing to HHS all violations of federal criminal law involving fraud, bribery, gratuity violations potentially affecting the award. So you must have something about that. So program income flexibility for 330 grantees. How is health center program income different than other program income? Well, health centers, we're able to earn a profit. And there's a program income exemption related to the Uniform Grants Guidance. Program income is added to the total allowable costs. So if you look at your notice of award, and there's usually a section related to program income, and there are different program income methods. And so for the 330 grant, it is mostly, they use the additive method is what you will see on your NOA. And then when you are completing your federal financial report, there's a line item for program income related to the additive method, and that's where you would put in your program income related to your 330 grant. So considerations for out-of-scope services or other lines of business. So when we talk, if your health center is, doing things that are out of scope of the 330 grant, or they are, other lines of business, you just want to make sure that you are very mindful and careful about those expenses. You want to make sure that it's clear that you aren't using income generated from the 330 grant to fund out of scope services or other lines of business. I will give you an example. I worked at a health center that decided to um, produce a magazine. Um, and so I thought that was a wild idea. I wasn't completely on board, but the CEO really wanted to do it, and so we did it. And so we had to be very careful to make sure that we kept all of those expenses, separate in our accounting. We actually created we actually made it its own entity because we did set it up with its own tax ID to make sure that it was separate and it had its own it was its own entity in the accounting software. And we did that to ensure that it wasn't commingled with our other grants. Again, like I mentioned, the segregation of financial records is important. Making sure that you're allocating salary and wages based on effort to federal and non-federal programs. Shared cost allocation considerations, right? If you have your indirect expenses, you need to consider how you're allocating those across your lines of business. And you also need to consider if you have a NICRA, negotiated indirect cost rate. Um, so those are some things to consider if you have out of scope services or other lines of businesses. Um, and then I'll quickly just talk about indirect cost rates and sort of some pros and cons. So there are some pros. The audit benefits. Auditors don't test procurement for time and effort or indirect cost rate pool on audit. Instead, they test the application of the rate. If your organization has numerous grants, it's not as helpful if you only have the health center grant. Rates can be helpful related to certain types of funding. Admin capped on a grant by a grant agency. The WIC grant capping rate without legislative authority by law is required to allow the federally negotiated rate. And Ryan White, the 10% statutory cap on admin expenses. The admin expenses and time cards not needed if allocated 100% to the indirect cost rate pool. Time card needed if directly allocated to a portion of grant. Time card would still be needed based on the actual time. And so some of the cons when applying for an indirect cost rate, if the health center hasn't always used the rate and you have a lot of grants, the implementation of it can be challenging, and you will likely need to rebudget those. Can apply for grants with rate, but when you start using the rate, you must stop directly allocating all admin expenses to all grants. It's all or nothing, and you're locked into using it for all grants to request reimbursement for indirect expenses. And the rate negotiation can take a lot of time right now. I had a health center who has literally been waiting for over a year to get their cost rate approved, which, as you can imagine, creates sort of a mess in terms of the accounting, right? So if I have an approved rate of 25% and I have submitted an application and I'm hoping to get 30%, well, I can't do the 30% until it's approved, or I guess you could, but it would be risky because if they don't approve it, then you've got to back all that out. And if they take a long time to approve it, then you're at the 25%, but then you want to be able to go back and capture that 5% delta that you're getting if you have the 30%. So it can get a little messy. And we all know that dealing with the federal government and HRSA, sometimes there are delays in response times and getting back to us. So it's something you definitely need to consider if you are considering an indirect cost rate. So closeout considerations. If you do have an audit, if HRSA is going to come on site, or if they do have questions, or if you get emails from your project officer, you just want to make sure that you respond promptly. Having organized records goes a really long way in these types of situations, and it goes a long way just in an audit scenario when you're getting your annual financial statement audit. Health centers who have good records and organized records, they tend to be able to respond quickly and get the requests that are being asked for because they're already organized and have those. And auditors, they notice that and they see that. And so it can work to your advantage to have that financial discipline to make sure that you're saving the documentation, that you're saving it on a network drive where multiple people can access it. Because if you're sick and the auditors are on site, you still want someone on your team to be able to access that information. So making sure that you have those kind of things set up, and those really require a lot of financial discipline. And those, from my perspective, those are what makes a health center a high performing health center, is when they do those little things, because they all add up over time. There's some wording for related to annual audits and what your policies and procedures must require. And then just put some sources here for where some of this information was extracted from. So yeah, so that's all about grants management. I hope you found that helpful and useful. And like I said, Stephanie will have the slides so you can have them to refer to. And as always, you can reach out with questions if you have questions.
Thank you so much, Katie. We always appreciate you and having you on these revenue cycle roundtable calls. If you all have any questions for Katie, feel free to drop them in the chat, or if you're like me and you don't think of your question until after the call is over, feel free to shoot me an email and I am happy to connect you with Katie. I just really wanted to share, I know we only have a couple of minutes left, just a really quick update. The last time we had gathered, we had just gotten the notice about the 4% Medicaid rate cut. So you all should have received an email recently from DMS, KIC, and KPCA that rate cut at this point has been reversed. So a surplus of revenue was found, freeing roughly about 255 million. So DMS is working closely with the governor's office, the Cabinet for Health and Family Services, and the General Assembly to identify a longer term path forward. But at this point right now, that rate cut has been reversed. And that just affects all Kentucky Medicaid provider types. So we wanted to be sure and give you a little update on that. And real quickly, I am dropping an evaluation link in the chat below. Please take a second. You can use the link that I shared here, or we have a nice QR code on this slide and you can scan it on your phone. Please take a second to just rate us and let us know how we're doing, what you'd like to see, what we should be doing differently. We really appreciate and value your all's feedback. So next month on August 29th, we'll gather again with Nicole Moscatelli and we'll be chatting about best billing practices and be doing a Q&A session. So come prepared with some questions. But thank you guys so much for gathering today. Thank you again, Katie, for hosting and presenting. And we will see you guys on August 29th.
Thank you. Have a good day.